Okay, welcome everybody. Just start to do a couple of technical checks there. So welcome to this evening's webinar, Live Forex Market Review. My name is Duncan Cooper. Before we get into the webinar, if you could read through the disclaimer, that would be great. I'm just further checking while you're reading. Had some internet issues coming on, so sorry for the delay. So please read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar. Just follow the link that I've given. For those in the webinar, you can ask me questions if you wish in the webinar chat or question and answer box. So I'll just give you a second more or two just to read through the disclaimer, which is new. Hopefully you can read it. It's a little bit smaller in writing. Or I will move along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time trader. I've been trading the forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen. Through the week, you can connect with me at our website. Go to acy.com Market News tab, or our YouTube channel. I'll find my analysis on both those places. So ACY Securities Australia on YouTube. Or you can also connect with me on Twitter and LinkedIn there. Those are my handles. As well through the week, getting access to our Telegram channel. That's where our analysis hits first of all. So contact Nathan.bray. He'll give you access to the Telegram channel. I'll put his details in the chat now. As well, if you have any questions about maybe opening a demo account or a live account, just contact Nathan. And if you want to get access to my chart layouts and templates for MT4, then just contact Nathan too. So his details in the chat. All right, just bear with me one moment. All right, sorry for the delay. My internet's playing up this evening, so hopefully I'm coming through nice and clear. Just wanted to double check my internet connection. All right, so let's get into the charts now. First up, we will have a look at the news for the day. Of course, we had last night at 10:30 p.m. We go back a day. Now I have to scroll down to 12th. We had the US inflation figure CPI data coming out. It was actually dropped more than expected, only by 0.1, but it's really representing the fact that inflation is dropping in the US as expected, or even slightly better. Even month on month, it's a little bit lower for core and core CPI. So that really put, the foot on the US dollar, squashing it down. And then if we have a look at what's coming out tonight, now we've got the US core PPI data, 10:30 p.m. Similar, it's an inflationary figure. And we will see whether it comes in as expected, where we're not seeing too much change. Core PPI is supposed to come in pretty much the same as last month. PPI data is supposed to go in slightly higher. Well, it's actually 0.5% higher because it was -3 last time. So again, we could well have fireworks at 10:30 p.m. So be very, very cautious about entering a trade before then. All right, I was very cautious about entering a trade before yesterday, and I've missed out on the move, but there we go. I'm still waiting for this data to come out, and then hopefully after that, for most of the month now, we have a clear run of not too much dangerous data coming out. So be very aware. It's yesterday and today is very volatile around these news announcements. I mean, if you're already in long on pairs to the US dollar and you're already in profit, then you just see more profit. So good for you. All right, so let's have a look at the dollar index. It is moving down. That's my chart updates there. And for months, 2 or 3 months, we've been trying to work out where the price will be moving back up to the top of the range, or is it going to move down to the bottom of the range and break? And we're clearly seeing a break below. So, of course, we could get a false break, but at the moment, it is looking very negative on that weekly chart. Your monthly chart is actually showing you a further lower top area here to a further lower bottom. So, at the moment, it's looking like US dollar weakness long term. In fact, this area of consolidation here where it's been winding up, we could see a significant break to the downside now, maybe back down to this area here, 94 area, if the market is that way inclined. So monthly weekly trends are down. We've had a considerable move yesterday. We're moving down today as well. So, monitoring this, we don't want to see price moving back above 100.82. If you're trading pairs to the US dollar to the upside, you don't want to see this moving back above 100.82. And at the moment, it's definitely holding below there. S&P 500. I was discussing the pullback to the 62% level, and now we're moving up to 127 extension. So a clear uptrend. The indices, the stock market is clearly anticipating that maybe interest rates are going to be coming down at some point. In US dollar weakness, that's just continuing. So long-term move up now, recovering. Okay, so the next major level, if you are along the indices, is this weekly high up here. 46.3722. All right. Personally, I'm not trading the indices, but if you were, that's the next key reference level that you're going to have to worry about if you are in a trade holding it for the long term. Okay. Just put and get my fib to come back on the chart. There it is. All right. So I wouldn't be, looking to maybe go long at the moment on the indices, just up here, the profit taking part of the fib. I'd be waiting for the next pullback, but clearly that's in an uptrend there on the S&P 500. All right, let's head into the euro dollar. That's all gangbusters at the moment. If we move to the weekly chart, I did put out on Telegram today that looking for a pullback to the broken monthly top now. The broken monthly top is this top here at 110.95. It's very difficult if you're not in because the market's just moving. It's not pulling back. And do you want to be a buyer at the top of the market if we get a pullback? So that is the difficulty at the moment. So weekly trend is clearly up. All right, next level. Sorry, that is the monthly chart. That's clearly up now, moving above the lower top. Weekly trend is up. Next reference level for resistance is at 111.85. Weekly resistance. And you can see that very big explosive move. Now, there was an opportunity early in the week. I put out on Telegram on Tuesday to look for a pullback to 109.76 to 70. That was this day here. It pulled back intraday. That was your opportunity to get long. Now it's very difficult because this is very well overextended, but I would be looking for a pullback to this area here at 110.95 if the market can offer it. And you could start to be drawing a fib in on the 4-hour range. Keep moving it up if price keeps moving up, and watch for a pullback now. I'm just looking at support today. So I don't really need that fib in at the moment because the 50% level isn't a level that I trade, but the level I'm watching is that monthly high with the figure in the central pivot point. Whether or not price can pull back today, we've got the PPI data obviously coming out later. That might print not as good as anticipated, and we may get a pullback to the 111 to the 110.95 level. Doesn't matter if it doesn't pull back today, but over the next 2 or 3 days, we may well see at least some pullback, and that's definitely there to be watching over the next week. 111 to 110.95. Can the market now clearly use that level of support for continued move up if we get, a friendly pullback? And as I was saying, if you're patient waiting for pullbacks, they will come because I highlighted this area here on Tuesday when price was up here. All right, so you just have to be patient and wait for the good levels because You could have traded here as it started to move up from that very good level of day support. It was at 109.76 to 109.70. You go and review. Okay, it was right there. So just waiting for a pullback. Okay, it's still going up at the moment. But, do you want to be a buyer at the top of the move? I don't. All right, Euro Yen. Now, the weekly trend here is up. And the monthly trend is up if we go to the monthly chart. All right, we're just dipping down inside the month before. So our weekly trend is up. And day trend's actually down. So it will be nice to see the day chart trend to turn up, and then you're trading in the right direction. Okay. So, and I don't have any reference point here at the moment to say I'm at a key level of support that I could look to go long from. So very mindful of the interest rate differential, euro versus the yen, and we could certainly get a higher interest rate on the euro side. So for me at the moment, this pullback's just corrective. So, we haven't pulled back to a 62% level yet. We could pull back to a weekly support if we really wanted to. So I'm not seeing a trigger yet I'd like to be trading to the upside in line with the overall long-term trends, but the day trend's down. I could go to the 4-hour chart and start to monitor. We do have a 4-hour uptrend here starting to form. I could start to look at a 4-hour retracement, drawing a fib in here to see if I get a nice pullback to a 62% or a 79% retracement, and I start to see that hold intraday on a 15-minute chart. All right, so that's what I'll be monitoring for there, is starting to keep the fib properly drawn across the 4-hour up range there that's starting to form. And can it pull back to a fib retracement level? And then, can it follow what we're seeing on the euro dollar? Is the strength on the euro dollar going to transfold into euro yen strength? I mean, the thing against that is the dollar yen's been moving down. So there's a fight there for the euro yen. Is it going to follow the dollar yen decline or the euro dollar rise at the moment? As you're talking about the euro pound to me, we'll get there in a moment. All right, so I'm just monitoring that euro yen. Does it start to see and show a very nice healthy uptrend on the 4-hour charts? Can you then see a pullback? Can you see a setup at the 62% level, 79% level on the 15-minute chart? That's what I'll be monitoring now at the moment. Euro pound, now you're saying to me weekly is at 79% fib. And you're viewing the August and the low of the range. Well, I can see on the day chart here from that high to low. That would be a 79% fib level. Now you're saying Euro pound weekly. Not sure where your 79% level is on the Euro pound weekly chart. So if you want to put in the highs and lows for me, the actual price points, I might have an idea. I'm not quite sure where you're coming from there, Izu. But I'll go through it anyway. From a trend perspective, the weekly trend here is down, lower top to bottom. I want to drop up to the monthly chart where we've been trading below the last higher bottom, so that trend's trading down. So the weekly trend's down. We are bouncing on weekly support at the moment at 85.18. Now this day trend is still in a downtrend, lower top, lower bottom. And I can see that there's a 79% level. I'll move to a 4-hour chart. There's a 79% level here. Is that the one you're talking about? Or I'm not sure if that is the one you're talking about, but that's the only 79% level I can come up with when I'm just analyzing the market. So if this day chart trend is going to hold, we are getting a reversal here at the 79% level. 85.65. 85.65 is a weekly low over here that we closed below last week. So our price is running back up on the day chart trend perspective, back to weekly resistance at 85.65, the 79% fib of the day chart range. Okay, and we may well be fading there. So if you're not in at the moment, if price was to come back up to that weekly level of resistance that overlaps with a 79% fib, of course, that could be a very strong level of resistance to trade back down in line with the trend. Stop above the high if you like that. It is rather range bound. It is struggling to move through, support, and the support that we've been testing over the last 2 or 3 weeks. Back to my daily chart is that's a monthly low there, 85.47. That's a weekly low that we challenged this week at 85.18. So clearly buyers are coming in at these levels. So they're coming in at weekly support, monthly support, and sellers are starting to try to hold at weekly resistance from over here. So it's a little bit choppy. It's a little bit range bound, but if you want to trade this pair, and if it's going to hold to its downtrend on the day chart, then yes, it is at the moment fading at the 79% level. So if it gets another retest there, 79% fib, weekly resistance, that would be the area to watch for a reversal to trade down. All right. So you could monitor that on the 15-minute chart, that level. The price level there is at 85.65, 85.66. That's where we've moved above, was holding and moved back below from that level. So that's the area to watch. If you want to get short that pair, that would be a good area to watch. And as I'm not sure whether that's the level that you were looking at, but that's how I would be drawing my fib across that day chart range. And that's where I get my 79% Fibonacci level there at the moment. All right. Edwin, you're saying you took a buy on the pound yen around the 180.47 level. Yeah, there's the level there with the monthly support. So we'll head over there in a moment. We can go into pound yen right now. So I had that area highlighted for you on Tuesday. It's trading down through it a little bit. And you're saying you got in around 180.47. So just a little bit above that monthly level. So for those that don't know, the monthly level is from over here on the monthly chart. We moved above that level. So the market could offer that to be support on a pullback. We're trading at 180.65 at the moment, so we're clearly above that level right now. And, this 2 kind of week sell-off could be holding there. We're obviously getting a positive day today from that area. And if there's anything that I don't like at the moment is just, of course, price can move up all day long now. Is we don't have an uptrend here on the 4-hour chart yet. It is still a 4-hour downtrend. That's the way you would drawing the fib at the moment. So it's just here, Edwin, it's just coming up to 4-hour resistance here at 180.79. So you're long at 180.47. If you can't, and your 62% levels at 180.93. So now, that little area there, that could be resistance today to move back down. So I don't know how much room you're going to give it when it's trying to trade through that area. But that's the failure point for your trade at the moment, because that 4-hour trend is down. But hypothesizing in terms of what would be ideal to see getting long this pair is that the 4-hour trend comes up and trades above the last lower top, which is here, and then has some kind of pullback, and you can construct, a buy on a pullback, at least within a 4-hour uptrend. Something like that would be a perfect scenario. But it doesn't mean to say that your long now can't move up from where you've gotten in, but you are still chasing that 4-hour downtrend. You're trading against it. Okay, so that's my thought there. Azur, you're saying on the euro pound, I left the wick out. let me just go back to the euro pound. So that's my thoughts there on the pound yen. We could be bottoming out here, but the 4-hour trend structure is still down. So I'd be a lot happier going long with the 4-hour trend structure being up. All right, let's just go back to this euro. Where am I going? Euro pound. So I go to the weekly charts. All right, on the weekly chart, you're saying the September week. What year of September are you talking about? I don't know where your September is. You're just saying September week. What September? What year? Can't be this year because we haven't got September yet. So hang on, you got something else. 2022. 2022. All right, so you're looking at this range. Are you looking at this range? All right, so you're looking at that range. All right, let me just go back to the monthly chart. So you're not wrong in drawing. I mean, we could be operating in that range. So if I was drawing a fib from low to high across that range, what I would want to be seeing is the fact that the monthly trend is still up. That's the higher bottom, that's the higher top, and I don't have formed a lower top, lower bottom, because what I do have is a lower top to a lower bottom. So the most immediate fib range now is from this high, from that high to that low, from a monthly chart perspective. All right, now the way price, yes, could respect the 79% fib that you're drawing from there. I get what you're saying. So there's a 79% fib. But whilst you're using that range as a potential fib, the monthly trend is down and the weekly trend is down. So it's a very low probability at the moment that that would pause there. Now, when price, see, this area that you're talking about has already been pre-used before, because from the monthly chart we moved up, then we pull back to here. So at this point there, that's when that 79% fib was really valid. Then the monthly chart went up to here to form a lower top, and then we've swung back down this way. So at this point in time, when we pull back, yes, that 79% fib was very valid, but I think it's much less valid here because a lower top's now formed on the monthly chart. Hopefully that makes sense to you. All right, you tell me that you understand. I mean, it's still valid because that 79%, that old 79% fib there does line up with this support here. So this support could hold to trade up. So if you're trading up from that 79% level, it lines up with this support here. So the reality is you've got support there, because support's stronger than a fib level, because a fib level is just a level that could be support or resistance, whereas support is a level that is definitely supports. Okay. All right. Hopefully that's all cleared up. All right. Let's hop into the pound dollar. All right. So the pound's at its high of the day, pretty much, and of the move. So the monthly, it is still, it's fiercely coming up into an uptrend here. Just trying to move above the 79% fib. I'll drop this down to the weekly chart. It's trying to trade above the 79% fib of last year's trading range. That's last year's high. That's last year's low. 2 or 3 weeks ago, I was talking about this imbalance in here. Top of it was at 130, and I was saying perhaps price is going to be targeting this area. Well, clearly we met that yesterday, trading it now 47 pips above. So that little imbalance area there is it was useful for a target, but now it's been filled. Now, we are getting very high up within the move of last year. I'm not suggesting that we're going to top out at the moment. Worth just understanding where we are within the range of last year. Because if we do start to see price moving back below 130, yes, we've got a weekly resistance there. And 2, the 79% fib of last year's trading range at 130.10. So if over the next week or 2, we do start to see price failure here, well, that could be the reason why we're at a significant price point within the range of last year. At the moment, though, the weekly trend is up, as we can clearly see from yesterday's move, and the day trend is up. All right. And, we are 2, 4, 6 days up. Very difficult to buy on the 6th or the 7th day up. You really need to see some form of pullback, at least intraday, if not have a 1 or 2 day correction. Don't get caught with the fear of missing out and trying to buy at the top of the move. Over the last week, so this is Thursday, Wednesday, Tuesday, Monday. So Monday, in fact, on the weekend, I said, as the new week starts, watch for a pullback to day support. So that was really the key day to look to get long this week, was that pullback to day support there. In the previous week, I said watch for a pullback to weekly support, 126.79. That came in on Thursday. So being patient and waiting for pullbacks to key levels, they have been happening. Last week, pullback to 126.79. Monday, pullback to day support, 127.59. The next major pullback level would be here now, 128.48. I know that's 200 pips pullback, but you could start to be looking at 130 for a pullback now that we've broken above weekly resistance, but it's just well overextended at the moment. All right, so you can monitor the fib on the 4-hour upward moves. There's the current one. And see if anything comes together as price action starts to have a corrective phase at some points. All right. At the moment, from a pure support or resistance reference point, we've broken above weekly resistance at 130. 130 should be now your primary level of support on an intraday pullback. So there it is. Okay. I will just be watching 130 at the moment. Any pullback, will it offer support there? Can you see a setup to buy if you're prepared to buy at such high levels at the moment? I'd much prefer to see a bit more of a healthier pullback. All right, but the market might not want to pull back. If we continue to get negative news today from the PPI data from the US, we may obviously move higher, but it's very difficult at the moment to be a buyer at such high levels. But watching 130 at the moment would be a level to watch. If I had to buy, then I'd be watching that level as my primary level of support for a pullback. However, I would much prefer to see a pullback to this top at 128.48, but that's a long pullback, isn't it? So sometimes you just have to be patient for the key level. Now, intraday at the moment, if you want to use pivot points as key levels, in a very strong trend, the central pivot point is the key level for intraday trading. And of course, at the moment, we're well above the central pivot point. We're in the red zone. Yesterday's trading, you can see the pullback to yesterday's trading only came to the central pivot point. Today, we haven't been able to pull back to that level. So if we do get a healthy spike down after the PPI data, you could also watch the central pivot point, and the central pivot point is at 129.66. Okay. So that's another level to watch. But your primary level is the 130 level at the moment for a pullback. Okay, New Zealand yen. Now this is flying north on the New Zealand dollar, moving up. Now, if we're going in line with the weekly trends, even though we've been false breaking that monthly high to the left here. You go to the monthly chart. We've been having a false break of this top, but the weekly trend is up. And this is flying north now because the New Zealand dollar is moving up strongly. So you could monitor where we are pulling back to within the weekly range. We've almost got down to the 62%. Now this is where it's going to get difficult at the moment because some of these pairs have mixed time frames. The weekly trend is up and the monthly trend is up, but the day trend is actually down. So which time frame do you want to trade? Do you want to base your trend decision based just on the daily chart, which is down, or off the weekly chart, which is up? So it is difficult at the moment. I'm on the fence about which way you should be trading this at the moment. Because if the dollar yen continues to move down, that could affect the New Zealand yen to move down. So if we just, we've been a bit short of the 62 level. It'd be nice if it got to the 62 level. You could say, okay, maybe a weekly high bottom could be forming from that level. So we haven't quite met to that point yet. So from a day chart perspective, if you thought we've topped out up here at monthly resistance and we false broke above this top at 88.16 from the monthly chart, then you could be simply just looking for your next opportunity to sell. 62% levels is fraction above monthly resistance at 88.16. So you could be just looking for a lower top to come in for the next move down, because that day chart trend is down, but the weekly chart trend is up. So which one's gonna win out? It's difficult at the moment. So I don't have an answer for you. You have to make a decision as to which way you want to play it. Now, New Zealand yen and New Zealand dollar often move in the same direction. So if you go to the New Zealand dollar, the day chart, you can quite clearly see that we've heavily broken above now. We had a level here that we were holding at, 62.03. But after the news yesterday, we've heavily broken above. And that level is no longer valid. This high here is a weekly high. So now we've turned to higher bottom, higher top. Weekly trend on the New Zealand dollar is up. Weekly trend on the New Zealand yen is up as well. So maybe really you should be looking for opportunities to maybe trade to the upside on the New Zealand yen when they can start to present. Okay. But it's difficult on that New Zealand yen at the moment as it's just rolling against the day chart downtrend. So trend on this New Zealand dollar is quite clearly up at the moment. Now on the weekly perspective, it's heading towards this double top area. The question will obviously be when it gets up to 63.79 area, what is it going to do there? This could be a failure point. At the moment, with the very dominant weakness of the US dollar coming into the market, I would probably favor, at the moment, looking to try and see a pullback on the New Zealand dollar to offer a buy, unless some further information comes out when we hit 63.79. All right, so at the moment, I'd be monitoring the 4-hour chart for a pullback. The clear support reference point is that weekly top that we've broken above at 62.47, and we're 100 pips above there. So, it's not going to get back to that level today. With the volatility of the news at the moment, you just have to be patient and wait for price to move back to a very nice level that you could trade from. All right, again, as I was saying on the 50-minute chart for the pound, you could be monitoring intraday on the 50-minute chart and monitor the central pivot point. Strong trends that are unfolding day by day and not pulling back often only pull back to the central pivot point. So you could do some watching the central pivot point for a pullback. We've got nowhere near the central pivot point today. We're a mile away from it at the moment. So getting any obvious pullback area at the moment is very difficult. That's like 90 pips away from the very obvious area of the central pivot point, or a little bit below at 62.47. So again, it's just a matter of waiting for a correction. A correction will come. You don't want to get caught being the buyer at the top of the market. Okay, so just buy your time. So I just want to hop back to that New Zealand yen. Most definitely watch that 88.16 level. That's the monthly top. And it kind of overlaps very closely to 88.33 62 level. Just watch what happens there. If you start to see weakness, there may be an opportunity to trade down from that area. Okay. And I haven't covered the Aussie pair, so we'll just hop over there. Aussie end's moving up. Now I did put out on Telegram that I thought price may well move up to 95.13, broken day support, and it could move up to weekly support. Or sorry, broken weekly support, this high over here. So what's happened over the last 2 trading days is we come just short of weekly support down here at 93.03, got down about to 93.20. And we've been reversing. Reversal candle yesterday. Okay, and the 4-hour chart has turned to up. And I did put out on Telegram today that earlier in the day, what I was looking for was, could we break above yesterday's high to at least confirm a reversal by breaking above yesterday's high? Could we break above yesterday's high and then pull back to the, oops, wrong tool. Then could we pull back to the 94 level? But once it broke above yesterday's high, it never pulled back. All right, when we're dealing with these very strong markets, which are reacting to the news, you need some confirmation that, okay, you're getting a reversal, but then it's always nice to trade a pullback intraday, and a pullback's not coming. So this could be reversing strongly back to the upside now. Now, day perspective, though, is still down. It's like the New Zealand yen. I was saying the weekly trend is up. We move back to the weekly chart. Excuse me one moment. All right, sorry about that. I thought I was going to sneeze. This weekly chart here is in an uptrend, even though it's been having a healthy corrective movement back. Higher top, this is a higher bottom area if it's going to form a bottom here, and it's pulling back to weekly support. It's pulling back to the area that we broke above, and it actually couldn't quite pull back to it. So that what that tells you is that the buyers are coming in ahead of support. They're eager to get in to catch the next train, maybe. So the weekly trend is up, and the conflict is that the day trend is down. Which direction do we trade? Price could obviously stop at daily resistance at 95.13 and weekly resistance up here at 95.73. And drawing a fib, you could monitor to see how price starts to go. I think if we move above 95.13, we're probably moving higher. So if we fell at 95.13, then you could look for an opportunity to trade back down. I think if we get back above 95.13, that's really the buyers taking control, and we'll probably see a trend change on the day chart. But getting long with this news environment at the moment, getting long early in the day when we were breaking above yesterday's high was, or close to that area, was probably the area to look for your trade today. So at the moment, the question is just, is this continuing all the way up, back up, or is it just going to fail in this area here? So you can monitor for a failure here, but I suspect maybe this pair in the New Zealand yen may be well following its cousins, the New Zealand dollar and the Aussie dollar, okay? And we may be moving much higher, so we'll have to look for some form of entry on a 4-hour chart, maybe in terms of structure. The trend structure there on the 4-hour chart's turned up. So you could monitor that 4-hour trend. Let's get rid of that other fib. Keep dragging the fib up if price keeps moving up, but just simply monitor for a 62.79% pullback. Do you see support? Can you see an entry on a 15-minute chart to trade up? I think we may have bottomed out there the other day for another long-term move up. All right. All right, so some of these pairs are just a question, a few days of monitoring. Aussie dollar. Last week I did put out to watch for a pullback to 66.04 down to 65.73. Did offer you that. That's Thursday, Wednesday, Tuesday, Monday. Last Thursday it offered that. It was before the job figures, so it's a little bit difficult to maybe hold a trade when the job figures was coming out, but it did offer support there and an opportunity to buy. Of course, now we're screaming up, so getting along down there would have been ideal. And we're moving above these 2 weekly tops. Go to your weekly chart. Those 2 weekly tops there that we broke last month. So clearly we've got a higher top scenario now and a higher bottom. I've been shouting that maybe this has been a higher bottom forming. All right, so it's overextended at the moment, but we are moving above 2 areas of key resistance that was. Now, last time we moved above, we simply moved back below. Will any pullback this time be your support area? And that's the area to watch at the moment to the 4-hour chart. 66.18 to 68.04 is the weekly area of resistance that we moved above. So that should offer support if the buyers are going to continue in control. All right. So looking for a pullback. Don't get caught buying at the top. So your 15-minute chart, there's your pullback area at the moment. You could even entertain a dip to 68, but you know, it moving below 68 is not good. That means we're going to get another false break like last time. So 68.18 down to 68.00 is your area of support that really should be support now if we have a corrective dip. So looking for a corrective dip. All right. We're at the top of the day. We're at the top of the move at the moment. Nobody, oh, well, an experienced trader doesn't want to be buying at the top of the move. Okay. Now 68.05 did today intraday offer some support here. So I don't expect more support coming in if we dip back down to 68.05. All right. All right, cover the Aussie pairs, the Euro pairs, the pound pairs, the New Zealand pairs. Let's get into the dollar CAD. So what we're seeing now in the dollar CAD is a continued move of the weekly trend to the downside, a lower top forming. All right. Level of resistance to watch at the moment is the most recent low formed at 131.16. And we've got monthly support down here at 129.63. We had an interest rate decision hike from Canada last night as well, which is all helping this weekly downward move. And the day chart is moved into a downtrend here now. It's overextended. The level that has been really used as a reference point is this monthly low over here at 132.62. So this area here. This is overextended, and a lot of pairs are overextended. We may need, a shuffle back, a rally. So that would be a level to watch. It's 2 levels to watch really. Got weekly support. There's a low here, which is at 132.25, and there's another high to the left at 132.22. So 132.22 is as good a reference as 132.25. So I would be watching to see if price can at least pull back to 132.23. And for me, the better level would be 132.62, the monthly level. So I just want to draw a fib in. $62 level overlaps with 133.01, which is a weekly level. All right, but I much prefer the monthly level because it's a stronger level. And it previously held here before having a bit of a run above. So I'm sure 132.62 would be clearly watched if you rally back to that level. But at the moment, it's just a game of patience waiting for the area. And I would be waiting for the area. After what has been 1, 2, 3, 4, this is the 5th trading day from that top last week. It's well overextended to the downside. Don't get caught at the bottom. Wait for your rally. All right. So most of these pairs for me, I'm waiting for a rally. I'm going to probably have to wait into next week for a rally. of, you know, some decent type of corrective rally rather than just a 20, 30, 40 pip movement back intraday. It may take, you know, 1 or 2 trading days to do that. So I just have to be patient. So we'll look at the 15-minute chart. You know, 132.62 isn't that far away, really. It's only 100 pips. We could definitely be there tomorrow. In fact, we could be there today, depending on what the news brings today. So we'll just watch 132.62 at the moment. Can we rally back up to that level? All right, gold, I know that's been moving up. In fact, we'll just go into the franc first, dollar franc. Dollar franc has significantly moved below this monthly spot low. There's another one over here. $86.99. So we're definitely seeing a very clear shift versus the US dollar on all these pairs with the US dollar. All right, so clearly we're breaking below this monthly low now. So any pullback, watch 86.99 to be resistance. This week we've broken below weekly support, monthly support, 88.20, 87.57, 86.99. All right, so it's looking for a pullback. Again, not getting caught at the bottom of a move. All right, so look at the 4-hour chart there. It hasn't had really any kind of pullback in days. All right, so I would just be drawing my fib, keep dragging it down, and just monitor a retracement. 62 there at 88.01 is close to 88.20 weekly resistance up here. All right. Difficult when we get such large moves, when you're waiting for a pullback. You just have to monitor a fib range and see what happens over the next few trading days. All right. I think the key take for today's analysis is, you know, you don't want to be buying at the top of a move. You don't want to be selling at the bottom of a move. Okay. I know today more news can come out and we can move further down, but the news could spike it up. All right. So it's okay saying, well, I didn't trade and it went further down because of the news, but you don't know what the news will do. And when the market's had 4 or 5 days down of a lengthy move down, it's getting ready for a corrective 1 or 2 days up, because that's the normal course of events. So just don't get caught at the bottom of a move. Just be patient and wait for a rally and wait for something to set up after a rally has occurred. All right, dollar yen. Just want to have a look at the monthly charts. We've actually traded down below the low of last month, but the monthly trend here from the big swings is up. Higher bottom, higher top. Now we could be forming a lower top here, but we need another month or 2 to come in to really prove that. And the weekly trend here is actually up. Higher bottom to a higher top. And as I was saying on Tuesday, we might get a pullback to a 62% level, which is at 135.53 down here. That overlaps with what is a monthly support level at 135.16. At the moment, though, we could get support on this top here, this weekly top at 137.90, even though the market's reacting negatively for the US dollar. The interest rate differential, though, dollar yen wise, it all favors the US side. Whilst we're seeing inflation dropping, and that's been negative for the US dollar in terms of the currency pairs at the moment, in terms of dollar yen and the interest rate differential, just because inflation is dropping as expected, there hasn't been a discussion yet that the US will decline its interest rates. They could still be on hold for a good 6 months. And the interest rate differential on the dollar yen is quite clearly in favor of the dollar. And this weekly trend here, you know, is still very much up until it's changed. So I don't know how much of a long-term move we're going to see at the moment, but dollar versus the yen with the dollar weakness coming in. We could simply hold at this weekly support level at 137.90. You can see today we are positive on the day and we haven't actually traded down to 137.90. So if this starts to get positive, those pairs to the yen are just going to continue to move up, aren't they, as well? So at the moment, to get long after such a strong decline, I'd need to see the 4-hour structure change. And the 4-hour structure at the moment is still down. We are false breaking last month's low. We can often trade at last month's low, false break, and then trade all the way back up. So if we start to see a 4-hour structure here that says the 4-hour trend is turned to up, you could then simply be looking for, let's say the 4-hour trend turns up, however that looks, and then just look for a retracement on the 4-hour chart and look to go along. If we continually hold above last month's low, which is at 138.43, and we continually hold on that weekly support level, which is 137.90, then this could be the low of the month. So this is the key area to watch for support and a trend change. And first time frame to look for that trend change, I think at the moment would be on the 4-hour chart. So, you could be seeing this move to a 4-hour uptrend, and it could actually then move all the way back up to where it came from. So I will just be monitoring that for 4-hour trend structure to change to the upside at the moment. And then if it does, that could be the starting point for a move back up. Okay. I don't know if there's too much more downside on that dollar yen until we can clearly break below 137.90, the weekly support level. There's every chance we'll move back up. We need a clear, if you want to keep shorting this pair, you need a clear break below the weekly support level. That weekly support level's here. Whilst ever we're not breaking below, closing below, there's every chance that's going to hold and be the buy level for the next move back up. Okay. All right, final, the gold, it is moving into a new day chart uptrend. It's overextended. It's trying to, at the moment, ask the question, can it move back above that weekly high? So we're getting support from this weekly high, which is also this historical monthly high. And now we're asking the question about this weekly top over here. So this day chart trend is up, but it's in the profit taking phase of the fib range on the day chart fib. Let's get rid of that weekly fib there. We're at the 162 extension, trading into weekly resistance. So that would be, I would think, an area where we could expect some selling pressure to come down just to correct the upward move at the moment. So we'll start to draw my fib from that low to high. Keep moving it up if it keeps moving up with price, and look for a fib dip to the 62.79% level. Okay, and then look for your opportunity to buy. Now again, don't be buying at the top of the move. Don't be buying into weekly resistance for sure, especially when you're also at the 162 extension of that previous fib tool. All right, start to monitor pullback. Of course, look left. We're starting to get into the selling area from previous trading. All right, so it's not a great area to be a buyer. It's a great area, I think, if you are long, to take profits and maybe look for the next dip. Now, of course, with the news coming out tonight, we could just break above all those highs to the left. We could end up with a market at the moment that is in severe trend. It's anticipated that the US dollar is going to get much, much weaker, and we could, see a relentless move for a couple of days. But it's very difficult to be a buyer at the top of the move. All right, that's my thoughts at the moment. Is very much, just want to head back to see what the euro dollar is doing. Very much the market's at the top of the move at the moment. Look for a dip. So whatever your favorite pair is, look for where You know, if it's been moving up, where's the clear level of support that we could pull back to and offer then a high probability trade setup for yourself? Okay, it's not high probability for the long term buying at the top of the move. All right, everybody, any final questions to come in? Azur, you're saying you're long Aussie dollar yesterday. I think Aussie yen will be long too. Yeah, it looks, I think maybe the Aussie crosses are long. It's just a question of seeing a setup that you like on a dip. It's difficult when the market just goes nuts when the news comes out and then doesn't offer you a dip. It's hard to be, you know, if you're trying to manage the risk on your account, it's hard to be in a trade that isn't really seeing any profit when we have the CPI data coming out and then the PPI data coming out. Of course, if you're in and now you're seeing profits, well, that's great. But if things went the opposite way, you would then have to be aware, you know, of the risk on it. So at the moment, the very high volatile things are US job figures, US CPI data, US PPI data, and then the FOMC statement. We have the FOMC statement coming out 2 weeks forward. So we do have 2 weeks forward now from today after the news comes out for hopefully the market to settle down a bit and offer some pullbacks and some setups. But those are the 4 data things that are really driving the market at the moment. All right. So just to give you a heads up, next week, I've got more analysis on Tuesday, the 18th. Wednesday, the 19th, I'm going to go through the average true range and session opening times. If you don't know what they are, I'll take you through it. 7 p.m. More analysis on the 20th. Okay. And if you're brand new to trading, we will be going through the quick start webinar again on the 20th with Nathan at 8 o'clock. I'll be with him there. So if you're brand new to trading and you want a strategy that you can quickly jump into and trade that gives you very good trend determination across 2 time frames and an exact entry and stop loss levels, then the quick start strategy may be for you if you're just starting out. So that's 8 o'clock on Thursday as well. All right, that's it from me this week. Edwin, you're saying thanks for the Trading the Zone book recommendation. Just finished reading, it's amazing. Yeah, if you, I mean, I can't remember how many times I've read it, but I know when I first read it, I thought, well, that's great. That answers a lot. That answers a lot of my problems. But the more and more that you read it, you'll then realize that you missed something when you read it the first time. In fact, you could read it 3 or 4 times and you still pick something out again the next time because something will be happening within your trading right now when you're reading it that wasn't happening last time. So then you can resonate with certain parts of the book. So yeah, it's a great book. I mean, it's not a long book, but it really hits the nail on the head of all the problems that traders have psychologically. So great. Yeah, it's a very good book to read, everybody. Trading the Zone by Mark Douglas. If you don't have it, grab yourself a copy. Slav, thanks. Annie, thanks. All right, everybody, thanks very much. Have a great weekend. As I said, don't get caught trying to miss out and buy the top of the market at the moment. Just wait for a pullback. One will come for sure, I'm sure, over the next week. All right, everybody, thanks very much. Have a great weekend.